Good morning, as we say in crypto, no matter what time it is. My name is Seth Hertlein. I'm the Global Head of Policy at Ledger. Ledger, of course, is a French company, most well known as the leading provider of hardware-based self-custody solutions for individuals and institutions. Now, I know many of you here today are either US-based or US-focused, but there's a whole world out there, and guess what? They're all doing stuff. So we are going to hear today from a great panel representing 3 key jurisdictions for crypto policy, the UK, the EU, and Canada. So let's meet our panel. Alexis, let's start with you.
Great, thank you so much. I'm really excited to be here. I think this is going to be a really interesting discussion. I'm here on behalf of the Canadian Blockchain Consortium. This is Canada's national organization for accelerating blockchain technologies. We engage in policy advocacy, education, and connect innovators in our community with industries to promote adoption. And my job at the consortium is to translate the great work of our different expert committees to government, the public, industry, and other stakeholders. And then in my day job, I'm the Chief Innovation Officer at a Canadian blockchain technology company called Guild One, which focuses on energy sector digitalization and emissions tracking.
Hi everybody, I'm Dr. Lisa Cameron. I'm MP from the House of Commons, and you can possibly tell from my accent that I'm a Scottish MP to the House of Commons. I have been chairing the All-Party Parliamentary Group, which is a cross-party group of members of the Commons and also peers from the House of Lords. And it leads up on the crypto and digital assets policies going forward for the Parliament. And we're currently undertaking an inquiry into Rishi Sunak, our Prime Minister's vision of the UK as a crypto hub moving forward, the challenges that that poses, the opportunities for the UK. Thank you so much for inviting me here today, because much of this is going to be about collaboration moving forward, and I'm delighted to be in the US and discussing this with peers. Thank you.
Hi everyone, my name is Marina Markezic, and I co-founded the European Crypto Initiative, which is a non-profit initiative based in Brussels. And its aim is to educate regulators about crypto, about blockchain, and specifically about decentralization and decentralized use cases. We've been working on this for 2 years since the first draft of Markets in Crypto Assets Regulation has been leaked. And it was quite an interesting, I would say, adventure. I'm really happy to be here, and thank you so much for the invitation, and I'm looking forward to the discussion.
All right, well, we're going to start with the elephant in every room, and we're just going to get it out of the way. So, of course, let's talk about FTX. So this is a question for the whole panel. Curious what reactions to the FTX collapse you're hearing in your jurisdictions, as well as how and where do you think the FTX situation shifts the policy trajectory in your jurisdictions. Lisa, as the policymaker on our panel, why don't we start with you?
Thank you so much. Yes, I mean, this is beginning, I think, to seep through now into awareness in the UK. I'm starting to get a lot of press inquiries about it and how it will impact the work of the group. And I would say that, yeah, it's something that has caused not just financial damage to the sector, but also reputational damage, to be quite honest. And I think we're going to be doubling down on our work that we're doing, engaging stakeholders, engaging those operating in the sector, policymakers right across the board, and looking at consumer protection always as a key and core part of the work we're doing. And I think it is a pivotal point where you know, the industry itself has to sort of remake its bed in that sense and look to ensuring good actors and weeding out those who are not operating under best practice, to make sure that you engage with regulators and legislators moving forward, and that we can have robust framework that the public can be confident about moving forward.
Alexis,
I can
Marina?
go next, yeah. So the situation in Europe is quite specific because we already have finalized and politically agreed upon the markets in crypto assets regulation, which would be the one that would probably regulate centralized exchanges as FTX. So I would say that at the moment, there's nothing major that would change in the European Union because this regulation has already almost been finalized. And I think it's also very, very good and very interesting that our people from MPs from different institutions had a reaction to what happened with FTX, and they were basically saying, we have this law right now, and it's going to protect you from things like this happening. So they're quite confident that this law is regulating centralized exchanges in a way that would protect consumers, which was one of also of the goals of the markets in crypto assets regulation. But I do think that, of course, there's been a huge reputational damage done. And I think that in the next processes, we have a technical process with MiCA. And of course, there's going to be implementation of this regulation. And all the national competent authorities, I'm sure they're going to look into that and keep that in mind, where they're going to make decisions on giving licenses to specific crypto asset service providers.
From a Canadian perspective, we were very impacted by FTX. Not only were there a lot of Canadian users of the exchange, but one of our major pension funds, the Ontario Teachers Pension Plan, actually had about $100 million in equity invested in FTX. So what we're seeing in Canada is that this is going to cause a strengthening of our existing consumer protection regulations for crypto exchanges, especially increased enforcement against exchanges that aren't complying with the various registration processes that we have. And I think on the other hand as well, it's really emphasizing to the Canadian ecosystem why we really need a strong crypto industry in Canada. Because the more services that we can offer to compete with these international poorly regulated exchanges, the more we can keep Canadian investments in our, highly regulated and relatively safe jurisdictions. So I think it's going to accelerate a lot of our processes in terms of onboarding our exchanges into our regulations and ensuring that we have the services that can keep Canadian customers safe.
Yeah, I think that's a great point. It's something that hopefully we'll come back to in the conversation with respect to Canada. But Marina, I want to continue on the discussion we just started a moment ago about MiCA. MiCA, of course, was finalized not quite finalized, but substantially finalized this past June in the EU, and which made the EU the first major market to adopt a comprehensive regulatory framework for crypto assets. It's also probably the one that the Americans in the audience here today will have heard the most about. But so now that the trilogues are over, what do you think MiCA got right? And what parts might you suggest that other jurisdictions would be wise not to emulate?
That's a brilliant question. So what is really good and what MiCA brought to the European Union is legal clarity, and we have now a unified market for crypto asset service providers and crypto asset issuers. Right now, when MiCA will be applicable in 2024, anyone that wants to offer services or issue tokens in the European Union will go to one national competent authority, get a license there, and then they can operate within the whole EU. This is not the case at the moment, and I think this is also very interesting for everyone that is not originally coming from EU, so maybe for the companies, for the US companies or Canadian companies, UK ones. That is very positive. The other very interesting thing, and I think it's also in a way a debate as much as I hear in the US at the moment, MiCA is regulating centralized entities. So DeFi is in principle excluded from the regulation. And what MiCA says specifically in one of the recitals is that partially decentralized entities are still going to be regulated by MiCA, but the ones that are completely decentralized, those are outside of the scope. And another thing is that NFTs in principle are also outside of the scope. But of course, the devil is in the details, so that could be good, again, in principle. But what does mean DeFi being excluded or NFTs being excluded? As you well know, MiCA is regulating very heavily stablecoins, and I think that stablecoins are representing a big part of DeFi. So those are regulated, decentralized stablecoins are prohibited. There's a lot of regulation around this. There's also a part that I would say is Terra Luna legacy that also talks about the specific algorithmic stablecoins. And I think that what we think about DeFi is that it's very hard to define what DeFi is because there's zero discussion or even like anything written about decentralization and how do we define decentralization in MiCA, which means that we'll need to wait for some of the secondary process, so our agencies, ESMA and EBA, talking about that maybe, or just wait for the application of this regulation in also with the national competent authorities. I think what is also interesting is there is a revision clause in MiCA. So again, speaking about DeFi, 18 months after its entry into force, we will need to review this DeFi clause, and potentially there is going to be also additional suggestions on how to regulate that, because the European Commission is going to write a report on DeFi, on lending, on borrowing, on NFTs, payments, transfer of specific stablecoins, etc. So we're still not safe yet. And just to conclude, I think what in a way it's also very interesting is the definition of NFTs. Those are in a way defined in a way that they are really unique and potentially large issuance of very similar NFTs could be regulated as crypto assets, so they would not be excluded. But maybe what I think it's the most interesting thing, if I compare it to the US, is that I would say that most of the tokens that we see out today will probably be defined as crypto assets and not as securities. So crypto assets is a completely new term that MiCA introduces, and that I think will be quite interesting to see how that would develop in the US and the possible differences for global projects.
Yeah, I actually agree on that point. I think MiCA recognizes utility tokens as their own thing, which I think is one of the things that MiCA got right. Right, it didn't try to shove crypto assets into one of the existing boxes, securities, commodities, currencies, something else. Right, it actually recognizes utilities as something new and fundamentally different, and gives them their own regulatory regime. Which I think is great. But Marina, I wanted to follow up on one thing that you mentioned, because I think it'll be interesting for the audience here. And so you said that centralized platforms are clearly in scope, fully decentralized protocols are clearly out of scope, but there's this partially decentralized concept that's like, Yeah. Do we have any clarity about how that's going to be defined, where those lines will be drawn?
So I don't think so. So this is, again, what you said before, partially we have legal clarity, but when it comes to decentralized use cases, I would say that we don't have it. What happened 3 weeks ago was the European Commission basically was commissioned a research on DeFi, and this research was published 3 weeks ago, which was quite interesting because it was saying what, in a way, our organization is saying, and I think many people in the room, that DeFi is designed in a different way from the centralized services, and it should be regulated in a different way. I've also heard a lot of my American colleagues having quite positive reactions to this research, and that research again could be a basis for the review clause that the Commission is going to think about and write in very, very soon, I think in the next year or 2 years. So there's still a lot of debate around that.
All right, so shifting to the UK, Lisa, so we just heard about the EU's approach in MiCA. As the only country to have successfully escaped from the EU so far, how does the UK's approach to crypto regulation differ from the EU's?
Yeah, I mean, we're so interested to hear about MiCA, and actually we will be visiting back to France in January with the all-party group. I'm thinking our one should be called Lisa, but I'm a bit biased with that. So we're really at the stage of, looking at, having left the EU, looking at a bespoke approach for the UK, and that's why a number of things are going on in the Parliament just now. So my own all-party group, House of Commons and House of Lords, are looking at the vision and how that can be moved forward. We're looking at the possibility of CBDC, stable coins. We're looking at the challenges ahead, but also the opportunities, and not just in terms of finance, but in terms of so many areas: art, culture, health. We're looking at how the blockchain can influence UK aid, making sure it gets to the most vulnerable. So there's so many applications, and the members of the Parliament are really keen to find out about the use test applications and how this will improve people's lives, because that's what we're there to do fundamentally, to try to make sure that technology enhances the lives of the people that we serve. So we've had a huge education piece now to MPs and peers. I mean, at the start, we were having to, I include myself in this, we've taken ourselves a long way, explained that Fiat wasn't actually a make of a car. And, we've come a long way. We've had many, many sessions understanding the terminology of the sector, understanding the implications, the use test cases moving forward. And now we're looking at international best practice, which is why I'm really pleased to be here today, to be linking with Canada and the EU. And we're going to be really trying from that to pull together recommendations to government to take forward a bespoke approach for the UK moving forward. I don't think it will be a broad-based approach like MiCA. I think it will probably be done in different sections, to be honest, moving forward. Our Treasury Committee is also undertaking a report, and also our Digital Culture, Media and Sport Committee is now looking at NFTs. So there's a lot happening in the UK Parliament. It's a good time to be involved in this industry, and please do reach out if you want to collaborate or to just inform and let me know about what you're doing to help our report and our recommendations moving forward.
Yes, that's absolutely true. I just had the opportunity a couple weeks ago to be with Dr. Cameron in Westminster for a series of conversations, and absolutely, I think my observation is there is a genuine desire to hear from all of you about what you're building, about your projects, about what works and what doesn't. So by all means, go pay a visit. London is beautiful anyway. A lot of fun. Alexis, so despite being our neighbor to the north, my suspicion is that many folks here from the U.S. industry probably have a better sense of developments in Europe than in Canada. So what is the crypto regulatory landscape like there?
So Canada has taken a very conservative approach to regulating our crypto sector, especially over the last few years. And for the most part, we directly apply existing financial regulations to cryptocurrency companies. So at this point, we haven't fully defined the security status of various types of asset classes. But what we have done as a consumer protection measure is to, and this is very unique as far as I know, securitize all centralized exchange transactions. So we have a mechanism in Canada called a crypto contract, and anytime a transaction takes place on a custodial exchange, it's considered a security derivative. So this has been a way of enforcing our security regulations on exchanges in the absence of actually codifying different asset classes and fully defining those. And I think it's been an approach that has led to much slower growth in Canada of our industry, in addition to policies like requiring centralized exchanges to use a third-party custodian, which is something that's being very aggressively enforced right now. But I think from a Canadian perspective, we're pretty content to have a slower growing industry that's going to be more stable over the long term, and we're willing to sacrifice the kind of exponential growth seen in less regulated jurisdictions.
So are there any issues that the industry in Canada would like to see fixed with that approach? And one that I'm thinking about, because I've heard about this firsthand, relates to custody. So I think one of the criticisms or complaints that I've heard is that digital asset managers in Canada have a difficulty for regulatory reasons finding qualified digital asset custodians in Canada, and so they end up, selecting, generally U.S.-based custodians, which is probably not the intent of the regulators in Canada, but that's the practical result. Are there any other issues like that that folks like you are working on?
Custodianship is definitely a big issue. Some jurisdictions in Canada are taking a much harder line on that than others. Especially Ontario, our largest province. And we actually last year had Binance relocate from Ontario to Alberta, which is less strict about the application of third-party custodianship rules because they weren't able to access qualified service providers in Ontario. And we actually have the same challenges with other requirements for our industry, such as traditional financial services and insurance. And one of the things that our industry would really like and is working on with government right now is trying to build open lines of communication and forums for collaborating with these sectors and with regulators to ensure that our industry has what it needs to be compliant.
Very good. Marina, we touched already on MiCA, but the crypto regulation in the EU doesn't stop there. So I want to talk about some of the other things coming down the pipeline that Web3 builders, including many in this room, should be paying attention to. So I'm going to throw a couple out there, but don't feel limited to that. But specifically, some of the things that I'm looking at are the Data Act, specifically Article 30. The revision of the Product Liability Directive and the Cyber Resilience Act. Can you sort of explain why this audience should care about those issues, and then anything else that's on your radar?
Yeah, of course. So as you said, we're not stopping there. This year, the MiCA and also transfer funds regulation has been politically agreed upon, and they will also become laws at the same time because they're linked. But we have a whole AML package that is happening right now. The AML regulation, there's going to be also a new agency in Europe. For the first time in history, we're going to have one agency that is going to look into those issues. And this is quite a heated debate at the moment. You probably also read some of the CoinDesk articles recently about privacy coins and their limitations of holding privacy coins for financial institutions. So this right now, this piece of regulation is debated in the parliament, and as you know, there's a whole process of when this is going to be finalized. There's trialogues ahead of us. I would say one of the most important regulations that are coming up is the Data Act. I think this is very, very concerning, and we're going to spend quite some time on this at the beginning of next year. So the Data Act is regulating data similarly to GDPR, but it also includes non-personal data. And there is only one article that is very specifically targeting smart contracts. And this article basically is saying that you need to have a kill switch in your smart contract. So you need to design your smart contract in a way that it can be stopped in order to be compliant with the Data Act. And I think that this is quite an aggressive and intrusive article to whatever we know in blockchain. So I think that this is an example of a regulation that is going very, very deep into what are the basic elements of the blockchain and of the products that we're building on the community and the whole ecosystem. And I hope that we can manage to change this one.
Yeah, I call it a poison pill, but kill switch is good. I like that one too.
I think it's also very specific because usually the people that are deciding about the Data Act are not that mindful about crypto as they were in MiCA because it was the topic. Here the topic is really data. So a big, I think, importance and effort here in the future. It's still quite early, so it's still possible to influence this piece of regulation. And of course, as you mentioned, there are some other things that are happening. Besides what you mentioned, there's some tax directive that is being also updated at the moment. We heard some rumors about another tax idea that the European Commission has, but I think it will leak in the next weeks. Besides that, on the product side, cybersecurity and also the liability on products, I think this is quite important if we think about, again, smart contracts and smart contract developers. The directive that is talking about liability on different products, hardware and software, is being updated. And in this case, what is very important is that potentially the developers of smart contracts could be liable for some of the things that could happen even years and a really long time after they have been released. And very similarly, the Cyber Resilience Act is also touching upon different products, and they're kind of also connected because, of course, the Cyber Resilience Act is defining the way of how someone should build products. But there is an interesting part for the product that has been already released. It will not be in a way applicable, so it will be only for the ones that are going to be released in a way from when this act is going to be applicable. And in terms of time frame, I think we have still some years until this is going to be a major concern for all of you right now. But of course, our work is happening right now.
Well, that's reassuring on the time frame, but I'm going to repeat this for emphasis because I think it's super important. So under the revised product liability directive, if software is included in the definition of product, that means that software developers could be held liable for economic losses related to a bug or vulnerability in the code of the users for a relatively indefinite period of time, right? This is unprecedented, right? Software has never been treated as a product for product liability purposes before, really in any significant jurisdiction. It's definitely something that you should be concerned about and paying attention to.
Maybe if I can just add, they're really thinking about AI. I think Europe is very concerned about AI, but of course it influences also this industry.
Absolutely. Okay. So, Lisa, we all saw the news. We're all eagerly awaiting our NFT airdrops from the Royal Mint. Of course, we also heard about the Cabinet's ambition to make the UK a global crypto hub. But to an outside observer watching up till now, it could seem that sort of the government and the agencies are not of one mind on this. And so I want to ask sort of what practical steps is the UK taking to realize this goal of becoming a global crypto hub?
Yeah, so we started taking a lot of evidence from the sector. We know that there are already some issues in terms of obtaining a bank account, for instance, in the UK for companies. Also, in terms of the registration process, it's not been as streamlined as it should be, and people don't feel that they're having feedback in terms of their applications at an early enough stage. So we've had many discussions now with the FCA about, trying to improve that, and they've really been very positive in taking that on board. So we're making sure that things are improving there. We're as a group, we're starting to look at where things are at just now. The vision's here. How do we get from A to B, and what does that mean? And what we're trying to do as well is bring our fantastic innovators into the discussion, to bring our research institutions into the discussion, our universities and colleges, to look at the jobs of the future, to think about, where do you go to train to develop innovation in this sector in the UK. So there's a massive piece of work in this vision, and by January, I've set myself quite a short timetable, we're going to pull together the written evidence, and also we'll have had a number of oral evidence sessions by then, and we will put forward our initial recommendations to government at that stage. That will be the first report of a number of reports, because then we'll do a deep dive into different aspects. But we want to have, some pragmatic recommendations at that stage to move ahead with, because we think that we don't want to rush and perhaps, not have the bespoke regulatory framework that we need in the UK to make ourselves competitive. But we don't want to be behind the curve either. So I think there is a time frame for this that we're working within.
So you mentioned, the UK is taking more of a sort of a piecemeal approach, issue by issue, instead of a comprehensive approach, presumably starting with stablecoins. Is there legislation in the works from the government, and if so, sort of, where does that stand, and what does the process look like from here? Like, what are the next steps?
Yeah, so there's legislation that's expected at the first quarter of next year, and we're going to be, as you said, looking at stable coins initially. I think that the process is that we want to get it right, so we're at the stage of taking that evidence and also looking internationally to collaborators and to look at what works where and what would be right for the UK. So when I've had those discussions about we need to push harder, we need things to be moving faster, I've had to take on board that actually, yes, sometimes there's benefit in doing things straight away, but with things like this, they want to make sure that they have an evidence base, that it's workable, that the UK continues to be a leader in fintech, that we're not making decisions that would be to the disadvantage of the UK. So they're telling me that not being first can be helpful, basically. And so I think there's a bit of a taking our time with it, making sure we get it right. And I think over the next 2 years will be really crucial. And actually that will be the run up to the next election as well.
Perfect. Sounds like great timing. All right, Alexis, previously I asked you if there were any areas that the industry in Canada might like to see change. Now I'm going to ask you sort of the flip side of that. What are some areas in digital asset policy right now where Canada is leading?
We do have a couple areas where we are leading, and both of them have to do with the integration of our crypto sector and traditional markets. In 2021, Canada was the first country to permit Bitcoin-backed exchange-traded funds on our major stock market. And now we actually have a wide range of crypto-based exchange-traded funds, including derivatives and other types of assets. And additionally, just last month, we had the first approval of a Canadian crypto exchange as a licensed investment dealer in Canada, putting it at the same standing as major securities dealers in Canada, like Canaccord, Genuity, and many others. And so because of this, and this exchange is CoinSquare, they're going to be able to start offering the kinds of margin trading and short selling and other services that are leading Canadian customers to look overseas at less regulated exchanges. So hopefully we can keep more of them in our regulated jurisdiction.
Okay, so we're getting close to time here. So I want to bring this full circle, which means back to FTX. Sorry, but hear me out here. So Canada has already had its FTX moment with Quadriga. So as a reminder, Quadriga was the largest Canadian crypto exchange until it went bust in 2018. And a similar story, when Quadriga faced liquidity issues, it started fulfilling customer withdrawals from other customers' deposits, of course, until it blew up. So how did regulators and law enforcement in Canada sort of respond to Quadriga? And could that be a path forward for us here out of FTX?
Quadriga was the formative moment in Canadian crypto policy. Consumers in Canada lost about $140 million US when the exchange, which was later found to be a Ponzi scheme, went bust. And most of the regulations that we're currently enforcing, everything from depository insurance to the requirement for exchanges to have a significant amount of their holdings in third-party custodianship, to some of the other strict regulations that we currently have, including limiting of services such as margin trading, all stem from an Ontario Securities Commission report that was commissioned after Quadriga went bust. And I think that, very similarly, FTX could be a formative moment for a lot of other jurisdictions. There are policies that can protect consumers. They do make things slightly more challenging, or a lot more in some cases, for exchanges. But I think we need to bring these institutions into our traditional financial sector and regulate them the same way.
Yeah, I think it's important to learn from history. All right, so we're out of time. I'm flashing zeros here, real quick, lightning round. What are the top 1 or 2 crypto policy issues, or maybe I should ask, sort of what issues do you think are the most likely to move next in your jurisdictions?
Well, I think I've sort of answered that one in the last question, but what I wanted to say was I think there's also going to be a real piece that we need to do, not just educating members of the Parliament, but also education and awareness. And I know that the industry can help greatly with this in terms of the public as well, because I think we need members of the public to be making informed decisions. We're not actually good at financial education generally for people in the public, and it's generally people who have an interest and involvement that tend to have the knowledge they need. But this is impacting everybody, and as legislators, we are, need to be focused on consumer protection in this situation. And part of it is regulation, of course, but another part is about enabling and empowering people right across our countries. And I'm sure we can work together with industry to improve upon that and make sure that people have the information and knowledge that they need going forward.
In Europe, we think about in terms of presidencies. So right now, the Czech Republic is presiding the European Union, and in this time, probably we're going to have an AML regulation finalized within the Council. The next one, as you mentioned before, the Liability Directive and the Cyber Resilience Act under the Swedish presidency. But in terms of applicable laws for projects, I think 2024 is going to be a very important year in Europe for everyone that is operating there, because MiCA and the TFR are going to be applicable at this time.
For Canada, a big priority for us is looking beyond consumer protection to the potential systemic effects of collapses like FTX on our traditional financial system. A lot of that comes from the fact that we have had quite a bit of integration with major Canadian funds investing in things like cryptocurrency companies. So Canada is going to be capping the amount of assets that can be held in riskier categories like cryptocurrencies or cryptocurrency companies on the part of regulated financial institutions.
All right, there you have it. Please join me in thanking our panelists.